let's say we're thinking about making a futures trading bot that does scalping. What are the most profitable scalping types of strategies? Let's say for like gold or oil or MES or MNQ or whatever, right? What are the most profitable scalping strategies? Profitability depends more on microstructure, edge, and execution than on any named pattern. But in liquid futures like GC, CL, MES, MNQ, the scalpers who last tend to cluster around a few families of strategies: order flow microstructure, mean reversion to liquidity, breakout momentum, and cross asset lead and lag. So order flow liquidity scalping, these target tiny edges, fractions of a tick repeated many times per day, and are the closest to most profitable in risk-adjusted terms if you can actually implement them. Closest to most profitable in risk-adjusted terms if you can actually implement them. I don't know if we have the ability to trade this quickly, at least not yet. Liquidity, vacuum, and absorption, trade into the spots in the book when you see aggressive market orders sweep a level and fail, or large rest in liquidity, absorb price and reverse it. Volume cluster reversion, price moves a few ticks away from the high volume node area, then snaps back as resting orders there act like a magnet. It sounds like we need level 2 order book for this as well, which we probably should add that eventually. Real-time DOM footprint signals using footprint charts, delta, and heat maps to hit quick continuation reversal trades during short-term rotations in NQ, MNQ. Why these can be profitable: they exploit immediate order flow imbalance rather than slow indicators. So order flow imbalance. They scale trade count. High-frequency futures scalpers often average 0.5 to 1 tick per trade net and still end up with very high Sharp because they run 10 to 60 trades per day or more. These look for short-term overextensions relative to some fair value or volume-defined equilibrium, particularly in range-bound regimes. When the price deviates a few ticks beyond a high-volume area or profitable or profile bulge, odds of a snapback in the near term go up. For instruments like gold, combining overbought, oversold oscillators with a higher time frame trend, only fade exhaustion in the direction of the dominant trend has been shown profitable in systemic tests. Edges come from behavioral extremes rather than any one indicator. We really hit on why most retail traders struggle. They try to race the big banks in a game of milliseconds. We definitely don't want to do that. Since you want to focus on minute bars or second bars where we can actually compete and win, let's pivot to a strategy that relies on market exhaustion rather than speed. I recommend we go with a 1 minute snapback strategy for MES or MNQ. It's perfect for the time frame you mentioned and doesn't require HFT speeds. Instead of trying to be the first one in, we wait for the market to overextend itself. Think of it as a runner who sprints too hard and has to stop to catch their breath. The setup: 1 minute bars. We use VWAP with standard deviation bands. We wait for 1 minute candle to close outside the second or third band. This tells us the price is stretched too far from its fair value. The confirmation: we look at the RSI. If the price outside the bands and the RSI shows it's overbought or oversold, it's our signal that the move is exhausted. I mean, this sounds like a good idea. You guys want to try this out? Let's do it.
So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments, so I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.